What if I told you that markets move in predictable patterns, and this was figured out over 100 years ago? In this video, I'm going to show you historical proof how this has worked in the past, and then I'm going to pivot to show you exactly where we're at in today's markets. Now, this theory has a lot of controversy behind it, but it's proven time in and time out to be extremely accurate at using human behavior and psychology to predict how far markets can go and potentially how deep they could retrace. In fact, this theory was found back in 1930 by Ralph Nelson Elliott, and you've probably heard it before. It's called the Elliott Wave Theory. He believed that markets don't move chaotically. They follow psychological cycles driven by human behavior. Now, to give you context of how this works, it works in 5 waves. These waves are to the upside of a potential move, and then it moves in a 3-wave correction. So you'll have 5 waves, 1, 2, 3, 4, 5 to the upside with a 3-wave correction, A, B, C. Think of it like 5 steps forward and then 3 steps back over and over and over again, which tends to oscillate between optimism and pessimism in natural sequences. And modern behavioral finance backs this. Studies by Robert Percher and others at the Socionomics Institute show correlations between wave patterns and mood shifts. And when the mood turns euphoric, we get the 5th wave, or better known as the blow-off top. And then when fear takes over, we get the ABC correction to the downside. Now that you understand the general guidelines of how this works, I'd love to show you some of the charts and how it's reflected in price action. I myself am a visual learner, so I feel that this can really help you understand where we're at once I show you on the charts how it looks. Now, before you potentially get bored, if you stick around, you're going to see the Bitcoin price prediction and how well this Elliott Wave Theory has played out historically throughout Bitcoin and where we're headed potentially right now if this is the top. And I promise you, this is something you don't want to miss. That is, if you care about the price of Bitcoin. Personally, I believe in 2026, Bitcoin is going to experience a massive sell-off. And it's very smart that we start paying attention to where that price would be so that way we can capitalize on when it gets there. So if you want to see where Bitcoin can be headed in 2026, you'll make it to the Bitcoin segment of this video. Now, enough rambling, let's get to the charts. This here is the Nasdaq, and I'm going to one of the most iconic times in finance when we had the dot-com bubble. Here is the Nasdaq pulled back to the dot-com bubble, and I'm just going to drop an anchor right when the dot-com mania started. So if we pull this all the way out to that first move that we saw, right when the move first started in 96, all the way up until 98. That was the first move. Then we had number 2, which was a corrective move in the wave theory, followed by wave 3 up into this region, then wave 4, which is a corrective move, and then wave 5, which is the blow off top. This is when everybody was going crazy in the dot-com era, buying up websites and investing in websites that actually never even launched or had businesses behind it. Then it was followed by an ABC correction. Remember, the corrective 3-wave is always to the downside. So starting at wave 5, when the mania bursted, we have wave A, which is to the downside. Wave B is a push back to a norm, and then wave C, which is always the deepest. That is Elliott Wave Theory applied in the Nasdaq during the dot-com bubble. As you can see, we have a clear wave structure, 1, 2, 3, 4, 5, with an ABC correction all the way down to the bottom, which happened in 2002. Now let's go to something a bit more relevant, because I'm sure if you're anything like me, this doesn't matter. This is past history. I just wanted to show you how it's worked. Now let's apply this to Bitcoin because that is probably the hottest thing right now. Now this is Bitcoin around the time that I got involved, which was back in 2015, 2017, when we went into that first parabolic run that went pretty retail. And if you remember, the move started to happen in 2017. The first leg brought us to the month of June in 2017. Then we experienced the second leg to the downside, followed by the third leg to the upside in August of 2017, and then we had that immediate dip right after, and then followed by the euphoria, which brought us to the highs at the time of about $20,000 for Bitcoin. That was the Elliott Wave Theory, 1, 2, 3, 4, 5, followed by the ABC correction. Now this first move brought us all the way back down to the moving average, which was A, and then we had B, which gave us that alleviation bounce, and then C, bringing us ultimately to the bottom in the end of 2018. That was the first wave theory that I could pull up on Bitcoin to highlight how well this has actually played out in terms of its accuracy. Now let's move a little bit closer to today's prices. The next clear example was the boom in 2020 that we experienced for Bitcoin, which pushed us to the new highs of about $70,000. This first leg brought us all the way up to about 80,000, beating our previous all-time high. Then we had that immediate pullback down to the 28,000 mark, which of course the next leg went much higher, about $60,000, making it a new all-time high, which was leg 3. Then we had an immediate correction all the way down to 31,000, which was leg 4. And then ultimately leg 5, which brought us all the way up to 66,000 for Bitcoin. Then of course, what happens after the 5 waves? We get a 3-wave correction. And this is playing out as a picture perfect wave theory yet again. The first wave down, which is the A leg, followed by the corrective move, which is the B, and then ultimately the C, which is when we bottom in end of 2022, early 2023. In fact, Jeff Seckinger, the founder of Nurp, made a tweet calling out the bottom at that exact moment. And in hindsight, he was actually right. And now let's talk about today's price, because this is very interesting. We are in the midst of a exact wave theory that's happened time in and time out for Bitcoin. And I wanna know what you guys think. Are we on the last leg that's gonna push us higher, or have we topped in this last leg? Because this is definitely going to be the last leg. Whether it goes higher, I'm not sure. And if this is the top, then we could experience the corrective 3-wave to the downside. I have a tool called the Fibonacci Retracement, which could help us predict if this is the top, where price could potentially go based off of historical mathematical pullbacks. And the Fibonacci sequence has been around forever, and it's universal pretty much across all things that are measured with math. Now let's just drop our anchor for the first leg, which was started back in September of 2023, which pushed us all the way back to our old highs, which was $70,000. That was the first move. Then the second leg, which is always a corrective one, which pulled us all the way back to the 50-day moving average, which brought us down to 50,000. Then we had leg 3, which pushed us all the way up to $100,000. And now we just experienced leg 4, coming all the way back to the 50 moving average, which has been used as an amazing dynamic support. And now currently, we are experiencing leg 5. As you can see, this is a perfect pattern of the 5-wave theory. You have 1, 2, 3, 4, 5. Now, do we know if this is the top? Because if this is the top, where are we headed next? I personally don't think that this is the top. I think we could push just a little bit higher, at least to 150,000. But just for the sake of this video and of this recording, let's say that this is the top. So this way we can calculate where potentially price can go in the very near future. But before I do that, since that price action does not exist yet, I need to use the Fibonacci tool to make forecasts on where the pullback of Bitcoin can actually occur. So I will just go to the bottom of this first wave theory move and drop the anchor of the Fibonacci sequence and pull it out to the highs that are current. And all of these are exact percentage retracements of where things can go. At a 23% retracement, that would bring us to $100,223 Bitcoin. At the 50% retracement mark, that would bring us down to 74,000, which is honestly a really good price to get back involved. Typically with the Fibonacci retracement, at the 50% retracement mark, that is a very healthy pullback, and going much further than that is not typical. Yes, Bitcoin is extremely volatile, and we've seen 70% corrections, 80% corrections. Do I think those days are over? Potentially. So to be on the safe side, I would predict that Bitcoin can see a 61% retracement, which would bring us to the 62% retracement mark. Now, if I just go ahead and draw the ABC correction now to show you guys what that would look like, I'll just drop the anchor at this high. And the first leg is always the shortest, which would be the A leg, which would bring us to about $86,000 to $90,000. Then we would have an attempt at a new high, which oftentimes never passes the previous high, because then that would be a continuation of the trend to the upside. So let's say the bounce back from 90K brings us to about $115,000, $110,000. Then we'd be followed with the C leg all the way down to the 60K region. And this is what the potential setup would look like if this is the top for Bitcoin. Now, if this isn't the top, the only thing that would change is we would extend our 5th leg to the high and then pull the Fibonacci sequence to that new high and then do the ABC retracement down to the 61%. I personally, at a 61% retracement from a high, feel totally comfortable deploying more cash into Bitcoin and acquiring as much as I possibly can. Now, if you found this helpful and you don't want to be left out on potential moves and upcoming financial news, then subscribe to this channel so that way you could take advantage of what's to come. Thank you for watching.